Today, we're going to be talking about a little bit of 401 chaos before XRP moons. And the reason why I want to get this one out here today is because we're seeing complete vindication on some of the investment thesis that I've been running with for a couple years. That the traditional equities market, otherwise known as stocks, is overvalued, that the bonds were set to break, and this is not a sustainable path that the United States and many other governments find themselves on, which is why they're having to restructure their debt and reset their currencies. And right now we see the worst year in history for bonds was confirmed last year, and this is the worst crash in history for the bond market, also confirmed. Now, the traditional 60-40 portfolio is what your financial advisor or whoever manages your money is going to have you in. And that portfolio, the 60-40 portfolio, which 60% is equities, 40% is bonds, just had its third worst year ever in 2022. And as I said, 40% of that portfolio would be bonds, which just had its worst year in history. The current crash that we're experiencing in bonds is the worst ever. And what I worry about right now is the 401k retirees who are currently building up a little nest egg, or those that already have a little bag accumulated, right? And the fact of the matter is that we can get our Social Security check, sure, but is that going to leave us with an enjoyable retirement? And what is going to happen if we take another 10, 20% haircut on our 401k? Are we going to be able to make that back? For me, I did have a 401k at one time when I worked a job. And upon leaving that job, I did take the penalty. I took that money out and I used that money to actually start my first business. So I've already done the exit out of the 401k program, and that's not what I'm advocating here today for you. I do prefer having control of my investments, but I'm someone who spends hours every day studying this. I've been doing this for over a decade, and I've been investing since about 2018, right? Actually putting money on the line. And I've learned a lot of lessons just within my brief 5-6 years of investing, and I've had my own business for nearly a decade now. So I've put my money to work for nearly a decade. I've won some, I've lost some, and I've already exited out of the 401k system. And right now I look at the potential to use a 401k program to potentially defer some taxes, potentially grow a little bit of wealth by being able to defer the taxes, or through a Roth IRA where you can pay the taxes up front and then grow tax-free after that. But I prefer to actually be a business owner and investor where I can choose to pay nearly no taxes legally through the different advantages that running a business and investing in real estate and other tax-favored asset classes provides an investor. That type of control is what I love the most. But like I said, you got to have a serious program and plan to do that. And so even if you're not ready to direct your 401k or retirement account, I want you to be armed with the education and the tools and the resources so that you can ask the proper questions to your advisor, whoever is managing your money, so that we can understand where it's at, what's happening to it right now. And if you have recently taken a haircut on your 401k retirement account, hopefully we can find a way to make that back. That's why I do what I do here on a daily basis. If you appreciate it, let's make sure we smash that thumbs up and let's get into it real quick. So right now we're taking a look at this market. Cryptocurrency, current events, and the greatest transfer of wealth in world history is our spiel. And we're watching right now as Bitcoin is at 34,500. Ethereum at 1,800 and XRP back up to 58 cents, back up about basically 4.25% back here today for XRP. Love to see it. But I've been warning about the looming Bitcoin bull trap rally and the looming crash, or maybe not necessarily a crash, I should say, but pullback. Okay, so we're watching this one. We have the Bitcoin spot ETF fake out, 33% bull trap rally that we're currently in the middle of, and I am waiting for the back-to-back eclipse ritual sacrifice, just like we got last year. And I'm not going to explain that in depth more here, but that's just applying a little bit of astrology into our technical analysis. Seems to have been working out pretty well for us, and so we just continue to watch it. XRP back up to about 58 cents today, like I said. DXY was back down today. Back down, but hanging out at 106 here, moving sideways over the past few weeks. And we see that our treasuries are hanging out sideways as well for the 2-year and the 10-year, both basically sideways. Now, oil, our UK Brent crude oil was back down today. We did see silver back up above $23 again, and gold did cool off after finishing off last week above 2,000. We closed the weekly chart above 2,000 for gold. We have cooled back off to 1995, but still remaining very strong here today. Now, what we notice is that last week, the tech stocks were down, and so the S&P 500 was down. But today, we see that the tech stocks were back up. NVIDIA bouncing back off this most recent correction back below $400 per share. NVIDIA officially in correction mode after it, topped out back here in August of this summer. It's cooled off. NVIDIA, just one of the magnificent seven stocks that have kept the S&P 500 propped up. But as you can see right here, we're down about 10% or nearly 11% on the S&P 500 right now. Equities are just beginning to cool off. And this is so important because, like I said, your traditional stock portfolio, 60% equities, they're going to slam you into some of these index funds like the S&P 500, the Dow Jones, right? They love their index funds. But as we're seeing right here, we've already done a significant correction here, down about 10%. Just in the last couple months. But then when we zoom out on our Dow Jones, you can see that we've already entered correction territory since our highs of 2022, January 2022. And it's funny, the stocks basically topped out shortly after Bitcoin did, right? Remember, right in here, November of 2021 was when Bitcoin went up to 69K. And here we had the Dow Jones went up to 36,500. About 1 month later, right at the turn of the new year, is when it went up to 37,000 for our Dow Jones. And then we've been in correction mode ever since. It's just this year, we did get a little bit of a rally back up above 35,000 here once again, but we've already cooled back off just over the last few months. And once again, down 20%, that is a bearish move, and that is confirming a contraction that is underway. So that's already been confirmed, and that's why so many 401ks took such a haircut last year. A lot of people reporting that their 401ks were down 10 to 20% last year. Not what we want to see. And so the reason why I bring this up, and I'm going to run through a couple data points, couple mortgage lenders that are actually getting out of the business completely. This time it is different. This time it is a lot worse because it's an everything bubble. But I'm going to show you guys a couple data points, and then we're going to show you guys at the end of this session what I am doing with my investments. So right now we're seeing this from the Kobesi letter. Americans are now spending 2.7% of their disposable income on interest, the highest since 2008. It's very simple. Our economy runs off of debt, and it blew up based off of cheap debt, some of the cheapest interest rates that we've seen in the last 5,000 years, literally since men started having interest rates, right? This is the cheapest that we've ever had it. This blew us up to where we got to. I just showed you guys the stocks, the highs that they went to. We've seen that gold has bounced off of the 2,000K level. It's getting ready to take off here into a historical move, into a new price discovery for gold. But what we're seeing is the equities are starting to roll over. We're seeing real estate starting to roll over, and the American household is feeling the pain. In 2021, Americans were spending just 1.2% of disposable income on interest. Meanwhile, 90% of mortgages are still locked in to rates below 5%. So this is why the mortgage lenders are going out of business, is because the real estate reset is underway. Many auto loans are still locked into rates that are half of the current rates, right? So you have cheap auto loans. You have 90% of mortgages that are below 5%. Currently, to get a mortgage, you're going to be at about 8%. And to get an auto loan, you're going to be at 8 to 10% plus. All while student loan payments just resumed for the first time since the pandemic. So remember, we had mortgage moratorium. Now we want student loan forgiveness. And this is not going to be happening because it got struck down by the Supreme Court. And now the student loan payments are due once again. They're trying everything that they can to, kind of ease up this burden. There's a bunch of different programs for student loan forgiveness that they've done workarounds. Basically, they're trying to work around that Supreme Court ruling, and the Biden administration is still trying to buy votes by forgiving student loan debt, but they are not able to do so. And so this is just more money, more household income, the disposable income that is going to be going to interest, and that is, going to be going to payments that they weren't even having to make, period, right? Over the last couple of years, they weren't having to make student loan payments at all. And now you go back up to paying $300, $400, $500. I don't know what the average student loan payment is going to be, but this is going to squeeze a lot of people. Americans will soon be spending 4 to 5% of their income on interest. The era of free money is over. And I shared a data point last week that the bottom 20% of America is spending 80% of their income on the essentials. They don't have any disposable income, right? So, and I would argue that the interest on your debt payments, that's not disposable income. That's fixed. It might not necessarily be fixed, but that's a payment that you have to make, or you're going to get your house repossessed. You're going to get your car repossessed. Your credit's going to get destroyed. And so this is a problem for many Americans as the Fed has rug pulled us and raised rates at the fastest pace in history. This is going to have the ripple effects are now being spread out. The equities markets were lagging. The bond market was lagging. And the real estate market was lagging. Now we're coming back down to this new normal is their new favorite term to use, right? The monthly cost of a new mortgage is now 42% of U.S. median household income, 10% higher than on the eve of the 2008 housing crash. So we've already achieved the worst affordability in history, but the monthly cost of a new mortgage is now 42% of the U.S. median household income, which is 10% higher than where we were at before the great financial crisis. But this time it's worse. Remember, this is not just a real estate bubble that's popping like it was in the great financial crisis of 2008. This is an everything bubble. That's the difference right here. A couple more data points to confirm what we're talking about here. Colin Robertson sharing this. Another mortgage lender calling it quits. People's Bank of Commerce has made the strategic business decision to exit residential mortgage lending effective November 1st. So what we're seeing right now is literally tens of thousands of mortgage lenders getting out of that business completely, as far as that being their job, right? The mortgage lender industry. But then we're seeing banks make the decision to get out of that business completely. So their whole department is shut down, right? It's not just someone that's saying, well, I'm going to decide to pivot out of my current job. It's no, you've lost your job. And this is what, this is a job that most people would have thought was very secure, right? Mortgage lending. This was growing. It was steadily growing. And the good times never were going to end, right? The music was never going to end until Jerome Powell came in and crashed the party. And he crashed the party with the SWAT team, right? And that's why we're in the situation that we're now in. Now, in doing this, making this decision here from the People's Bank of Commerce, they noted that 70% of mortgages now provided by non-banks and outlook for low demand factored into their decision. So they know that the mortgage demand is falling off. 90% of people are locked into sub 5% rates. They will not move until they are forced to move, which we will need a broader recession to do that, which we are experiencing. It's just most people are too stupid to realize it. And most people are listening to the mainstream media, which is in complete denial about the recession. And they've manipulated the data so that it shows that our GDP just grew by 4% last month is the report, right? Booming GDP is the data point that just got, released last week. But if you look, the devil's in the details, and the smart folks are shutting it down. Another mortgage lender going out of business, this time Homestar Financial, which apparently had 184 loan officers across 45 branches. Done. Going out of business. Funded over $10 billion over the past 5 years and $2.4 billion last year. So, these companies, these guys having a great old time. Just having a happy, slappy, good old time, right? It's just like the movie The Big Short, right? Where there's those mortgage brokers. It's like the scene from The Big Short where the mortgage brokers are talking about how great their time is, right? And now the music has come to a stop completely. And so, as I said, it is confirmed. The collapse in Treasury bonds now ranks among the worst market crashes in history. And this is why I'm putting out the content that I'm doing right now, is because when you can't find safety in the bond market, This is a very difficult market to invest in. And your financial advisor is probably not equipped to do so because he's used to selling you products, and that's all he cares to do. He doesn't really care if you actually make money. He doesn't really care as long as you've, kind of grow at a 5 to 10% per year, and you maintain that level, and you can afford to have a couple bad years here and there, right? As long as you keep your money in, and as long as you buy the next thing that Wall Street shill is going to send your way, everything's going to be fine. But that's not going to work out for us. And that's what's going to wipe out most Americans. And so that's why I'm making this content, so that we can save people's 401k retirement accounts. Or if you're just a young person like myself that's getting started with your investments and you're looking to buy your first house, you're looking to start a retirement account. Hopefully you've got yourself into a position where you have enough disposable income to create a retirement account. That's a separate episode. But here today, we're talking about this and confirming, guys, that this is not the white picket fence American dream, happy, slappy, good old days that we experienced over the last 50 years. This is a monetary reset. This is an economic reset. And we had the rug pulled out from under us. Jerome Powell came and crashed our party with a SWAT team, and they came in with the Billy Club busting heads. And some folks ain't going to make it. And so we've been putting out the warnings. And as I try to break this down for people to understand, when you can't find safety in the bonds, when you can't find safety in the equities that have been the staple, the bread and butter of the U.S. economy, right? These index funds like the Dow, which was down 700 points last week, but we got saved today. We jumped back up 550 points today. Meanwhile, the tech stocks were down sharply last week and up sharply today, i.e. why the Dow was down last week and now back up here today, is because, needless to say, this is not a coincidence. The tech stocks have gotten so large that they are required for a sustained move in either direction. The Magnificent Seven now reflects a record 30% of the S&P 500. Tech stocks effectively are the stock market right now. Based off of your risk exposure, they're putting you into these indexes, and then if you have a little bit more risk tolerance, then they're putting you into these individual stocks, these Magnificent Seven, which have been, outpacing the entire market and keeping the entire S&P 500 and the Dow propped up, our stock market, our equities market as a whole propped up with the cheap, funny money that we got printed over the last 3 years. Basically, a third of US dollars in circulation got injected into our economy and into our markets over the last 3 years. And this is why we topped out. We had a good time, right? You have to think about this. This is what happened. Jerome Powell topped off all of our drinks and picked the last song for the party, the last song for the night, which was epic. And then when everybody wants an encore and to keep the party going, then the SWAT team comes in and kills us. That is what, effectively, in a nutshell, to break it down to a simple metaphor for everyone to easily understand, that is what Jerome Powell has done to with the monetary policy that the Fed controls. And then these are the ripple effects that we are now experiencing in the broader bonds, equities, and now real estate. Crypto got killed first. That's the beautiful thing about crypto, is we just rip off the Band-Aid, we get sacrificed, and now we get to build back up. So what am I doing? Well, I'm not putting my money into an account that somebody else manages. That's first and foremost. But if you do have money that somebody else is managing, I want you guys to be armed with the correct questions and to understand these asset classes so that you can understand what they have invested your money in, and maybe you can help them make a better decision, because we can see the Wall Street portfolio, the preferred Wall Street portfolio, 60-40, 60% equities, 40% bonds, had its third worst year in history last year. Only other times it was worse, I think, was during the Great Financial Crisis and maybe during the Great Depression, which borderline we might be heading somewhere in between there, right? Is it going to be a recession? Is it going to be depression? That's what we get to find out. And this period of potential stagflation is going to kill so many people. So, like I said, right now, for me, I'm keeping control. But for those of you that don't have control, we want to be able to ask questions. We want to be able to apply a little bit of pressure. We want to be able to poke, why are they putting you into the moves that they're making right now? The bonds don't appeal to me because I don't trust our government. And I think that we're on an unsustainable path with our debt and the deficits the deficits that we're running right now, that's not a deal that I want to do. Definitely not junk bonds, definitely not, junk bonds, smaller municipality bonds, corporate bonds. No thanks. No thanks. Because I want to see the broader economy. I want to see the banks. The banking crisis is not over. I want to see the real estate market all adjust to the new normal before I make a move. The only moves that I'm looking at right now would be in private equity. And this is in companies like, say, Ripple, say, other companies, fintech companies that are in blockchain. There's a lot of AI hype right now. I don't buy into that, but I want to be where the new world is going, right? And so I'm looking at private equity deals like that. I'm looking at real estate. The beautiful thing about building out my real estate portfolio right now is I'm entering the real estate asset class at 8% mortgages, at a 5% Fed funds rate. I'm getting to enter in while there's blood in the street and absolute carnage, which is one of the best times to be getting in. And see, when you have this understanding, and I'm investing today as if I'm not going to get lower interest rates next year, right? What is the saying now that the mortgage brokers are shilling to you and the real estate agents are shilling to you? Marry the house, date the rate, marry the house. So you're just going to date the rate and we're going to refinance next year or in 2 years because don't worry. The Fed's going to bring back down rates and Daddy Pal is going to take it easy on us, even though they're saying, and most of the expectations actually are finally starting to realize that they're going to be keeping rates higher for longer for the foreseeable future and through next year. And even if they do bring them down slightly, we ain't coming back down to a 2% Fed funds rate, i.e. we ain't coming back down to a 4 or 5% mortgage rate. And it was even reported by CNBC today that we might not see a normal real estate market until 2026. Well, what does that mean? It means that we have a complete reset for every single asset class underway. And where am I finding safety? I find safety in the precious metals. That's why I found it so important to partner up and be affiliated with precious metals dealers who will help you roll over your 401k retirement account to precious metals. I'm not putting out this video today just so that I can show my affiliates. I'm just saying I have my affiliates for this reason, for everything that I just explained to you in the last, what have we been ranting for? 20 minutes. Darn it, I went long again. I always do this. And so that's why I partnered up with someone who can help you roll over your 401k retirement account, because I saw this coming. Now it's here. And now gold is tapping on 2000 again, set to break off into a historical price discovery all-time high for gold on the way, right? Same thing for silver potentially. And silver has a long ways to go to catch up there too. So I'm finding safety in the precious metals. That's what I save. I also have additional capital on the side, i.e. cash, ready to deploy, ready to buy more assets on the cheap. And that's going to be businesses and real estate that I understand, that I've been studying, and that I have built out a team and have the resources to back me and the experience next to me to carry me through investing into real estate with blood in the streets, investing into businesses with absolute carnage and chaos around us, right? And what's the bottom line of all of these investments? I have complete control. When it comes to the precious metals, I have custody of them, right? I have complete control of my businesses, of how I'm going to be doing real estate. And this is how I roll. For you guys that don't have control, I want you guys to be able to ask your financial advisor, your money manager, why you are in the positions that you're in right now. And then we need to figure out where we can move to going forward, whether you understand real estate, whether you understand that maybe now you want to make an allocation to precious metals. Now is the time to do so before we take another 10% haircut, another 20% haircut. Because to me, the big elephant in the room is this equities market and real estate market that has been lagging, but we're starting to see it crack, and it has a long ways to go. And literally, Americans lost $6 trillion worth of wealth last year alone in equities and in real estate. And we just started the correction, and you're telling me that Americans lost the most out of all countries worldwide. American households lost 5.9, nearly 6 trillion of wealth last year, and we just started to break last year. we were still in denial about it being a recession last year, even though we met the technical definition of one. And so this is why I want you guys to be prepared. If you guys want more of this content, this is what we do on a daily basis. If you're new here, make sure you subscribe, hit that notification bell. We got a lot more coming on the way. If you want to get in direct contact with me, I'm not here to be your financial advisor, but I will be your friend. And you can join us in the Patreon exclusive Discord community. Get signed up over there. We're running a special right now, by the way. This is going to be running through the end of the year, where if you sign up for a 1-year membership of our Patreon Discord group, you can get 13% off your membership fee. So it's a great way to get in, save 13% on the membership, and you're going to be locked in for a year and talk to your tax advisor. But you also could consider writing off your Patreon membership as well, because we're talking about education for your business and for your investments. So consider that as well. Take that up with your tax accountant. I'm not here to be your tax advisor or give you financial advice. I want you to be equipped with the education so that you can go approach your money manager, or you can take control of your investments. The best way to do it is take control and become basically self-sovereign with how you make your money, ideally, and then how we invest our money. That's the best of both worlds. But with that being said, guys, I got a lot more content coming when it comes to the 401ks, when it comes to the retirement accounts, because I know we have so many people that have been getting bad advice, so many people that have no idea what their 401ks even in. And so I want to bring this type of content to you guys, and I'm not going to pitch you to dump your 401k and move it all into XRP. That's not going to be the plan. But the beautiful thing that I think is happening right now is that we get 401k chaos, i.e., the stock market is correcting, the equities market's rolling over along with real estate before XRP has taken off. We have XRP clarity, but we haven't taken off yet. And now we're starting to get equities rolling over. Now we're starting to get real estate rolling over. And maybe it's time to reallocate your portfolio, your 401k. The beautiful thing is that we have my affiliates will roll over you to precious metals. There's other affiliates that will roll you over to cryptocurrency. So there's other alternatives now available for 401k retirement accounts. And that's the beautiful thing, is that you don't have to be just in bonds and just in the indexes and maybe a couple, individual stocks, and that makes up your portfolio. Now they've made it more easier to get exposure to precious metals and to get exposure to crypto. That's what I do. For conservative plays, precious metals. For risky plays, I go into crypto, and then I go into my own businesses, and I'm going into real estate all in. And we're going to buy up a bunch of it. It's an exciting time to be in the game, and I'm just so happy that we've been able to change so many people's lives. We've been able to save so many portfolios, and we're saving portfolios right now, and our portfolios are about to be growing as we enter the next bull run. It's an exciting time, and that's why I encourage you to get tapped in right now, take action right now before we get XRP Moon, before we get the next bull run, before this correction is over. I think we still have a lot of time, but there's action that we can be taking on a daily basis. That's what I'm here to inspire you guys, give you some content to work with, and together you can put together your own individual plan for your investments. And I hope everyone appreciated this session. A lot more on the way. I will see you guys in the next one. God bless you all. Thank you so much.